Is Bybit safe? Let's address this question 3 different ways. What's their overall reputation in the industry? Is cryptocurrency trading in general safe? And what's the difference between an A-book and a B-book exchange? And why is that relevant to why you might or might not want to trade on Bybit, or in fact relevant to how you trade if you're trading on Bybit? So before we get started, please support the channel by scrolling down below, give us a blue thumbs up on the like button, subscribe, click the notification bell and select all. That way you'll receive notifications when we upload videos on technical analysis, understanding the different scenarios that might affect the price of Bitcoin, and most importantly, mindset. We believe at Conscious Crypto Traders that mindset and trading psychology is 80% of what it takes to be a successful trader. So we do a lot of work on this channel around mindset and trading psychology. Thank you for supporting the channel also by using our affiliate links down below. All donations to the channel or affiliate commissions go to support the development of infrastructure projects in our community here in Costa Rica. We build things like roads and water catchment areas, and these actually provide a lot of jobs locally. So we're very, very grateful when you support us. So let's talk about Bybit and safety. First of all, as cryptocurrency exchanges go, Bybit has a fairly decent reputation in the industry. They've been around for over 10 years. Many of the dominant YouTubers that talk in the crypto space use Bybit. One of the really nice things about Bybit is you can trade their inverse perpetual contracts. So they have 4 different currencies that actually settle out as the cryptocurrency instead of settling out as USDT, US dollar tether. What that means is if you're looking to accumulate cryptocurrency, this is actually one of the preferred exchanges because it actually helps you accumulate more Bitcoin or more Ethereum or more XRP because it's not always settling out as the US dollar equivalent, the US dollar tether. So reputation-wise, Bybit's fairly solid. Let's talk for a minute, though, about is cryptocurrency trading safe? Most exchanges who publish the results of their traders will tell you that over 80% of traders lose money. This is considered a very high risk form of investing, which is why I highly recommend that you use a test trading site, and Bybit has one. You can trade fake money on Bybit, and we actually have a different video on that you can watch after this one if you'd like to set up to test trade. But I recommend you trade fake money for at least 6 months before you ever start to live trade. And then when you do start to live trade, start live trading with very small amounts of money because you need to learn the psychology and mindset of it in order to become successful. A lot of traders do patterns that tend to self-sabotage, right? Like moving your stop loss up too quickly or getting out of winning trades too quickly with sort of a take the money and run attitude, but hanging on to losing trades too long. These are common mistakes that newer traders make that have you in the long run really lose money overall. So it's really important not only to learn the mindset and the psychology, but to learn good risk management if you want to use any currency exchange safely. Finally, I'd like to talk to you about the difference between an A-book exchange and a B-book exchange. I actually had to make some notes on this to make sure I explain this correctly. But a B-book exchange uses a third-party funding source to provide leverage on their exchange. So the liquidity on their exchange is considered pass-through liquidity. So the exchange itself actually only makes money if you make money. They make commissions on your leverage, and that's how they make money. A B-book exchange makes money by providing the liquidity themselves. So the key difference here is that an A-book exchange wants you to win and a B-book exchange wants you to lose. And remember, when you're trading cryptocurrency, this is decentralized money. So this is a deregulated industry. In other words, there's no third-party regulator watching over the shoulders of these exchanges. So the B-book exchanges are often known to do something called stop loss hunting. In other words, they want you to lose so that they make more money. So they might be causing these little wicks down that pick up all the stop losses that are too close to get you out of what might otherwise have been a winning trade. So on BBook exchanges, and if you haven't guessed already, Bybit is a BBook exchange. They provide their own liquidity, unlike an exchange like Prime XBT, for example. Prime XBT is an A-book exchange, so you're not worried about the exchange betting against you. In the case of Bybit, they are known to be a site that has a lot more of these wicks down to try and pull out people's stop losses. So it's harder to have winning trades on Bybit, especially if you move your stop loss up too quickly. So if you're trading on a BBook exchange, you're going to need to use different risk management strategies. You won't be able to pull tight stop losses up. In fact, in some cases, traders even have their stop loss just above the liquidation point of the trade, which means to do good risk management, you have to be trading a smaller amount of your portfolio. So it's just important to understand which kind of exchange you're trading on so that you do your risk management appropriately and you're figuring out a strategy that works for this kind of exchange. Hope that answers your question. If you haven't already, thanks for the thumbs up, subscribe, and hitting the notification bell, and we'll see you on the next video.